Not that long ago, the highest tax bracket in the United States was 70%. If you said that today, that would be decried as socialist. There's no way you can have a 70% tax in a capitalist economy. And yet we had a 70% income tax for a long time, nearly 30 whole years, and it wasn't that long ago. It was the 50s, 60s, 70s. In fact, it was the exact era that we consider the pinnacle of United States role modelship across the world. We were at our best in the 50s, 60s, 70s. That's when we were just swept up the whole world. Post-World War II, our economy's doing great. IMF is there, United Nations, and we are at the helm of all of it. That was the peak of U.S. idealism. The United States is both a country and an idea, so to speak. And we had 70% tax rates on the top income bracket. That's not across the board. That doesn't mean if you're making $30,000, $40,000, $50,000 a year that you're paying 70% of that in taxes. What that means is for every dollar that you make above $200,000 a year, you pay 70% taxes on that. It was a way to equalize the distribution of wealth. And it was very effective. And it's still the policy in most of Europe, which is why their social programs are far ahead of ours. So reducing the taxes from 70% down to about 40%, 30%, 28%, that was Ronald Reagan. Once it was at 28%, they promised, we're never going to have to raise taxes again. We did it, folks. That didn't work out. It lasted about 3 years, and they had to raise taxes again from 28% to 31% for that highest tax bracket, and they've crept back up slightly, such that the highest now is just around 40%, if you make it there. Let's take a look at the history.